welcome to this week's My Radar and Hunt Zone. Now, before we get on to this week's radar, let's look at the stocks that were on our radar for the previous week and how they have performed over the course of last week. Starting with Axis Bank. Last week we discussed that it has given a breakout here, but we would like to see a consolidation, which seems to be happening in this narrow range. Now, ideally, considering the broader market conditions, the price might correct a little further, but as long as it remains above this 6 to 7% level from our earlier pivot point, we will consider this on our watch list. If it breaks this price point, then this setup is not going to work for us and we will remove it from our watch list. On the other side, if the price retraces from any level above this level, and once it crosses the 980, 990 level, that's when we will initiate the position and we will set a stop loss around 900 levels, which is about 7 to 7.5% from the ideal entry point. The next one on our list was UltraTech Cement, where we saw this cup pattern forming over like 18 months period. And in last week, the price attempted a breakout above the previous high. And what we had discussed in last week was we would like to see some level of consolidation here or a brief pullback before it gives a conclusive breakout. So we can see here that pattern is forming here, supported by volume contraction. So as long as the price retracement does not go below the 7,750 levels, we will consider that as the cup handle. And once the price uh, starts moving up again beyond the 8,440 levels, I will initiate the positions with the stop loss around 7,750. When the price moves above this level, ideally I would like to see a volume spike as well, similar to what we see here or here. The volume should be at minimum higher than the average daily volume. The last one on our list last week was Tube Investment, where from its previous base, after rallying for about 50%, it started forming this cup pattern again. And over, let's say, last 192 sessions, it was trying to form that pattern. And last week, it briefly attempted a breakout. I wouldn't say it was a conclusive one. And that's when we added it to our watch list. And we said if it shows some level of consolidation before breaking out, then I will initiate the positions. So after it attempted a breakout for next 3 sessions, it traded in a very close range. In fact, it tried to break out one more time, but failed. And finally, on 21st June, it broke out of that region with volumes which were at least 2.5 to 3 times of the daily average volumes. And then it saw a fairly decent rally till Friday last week before it sort of got a pullback to the 3164 levels because of the broader market conditions. But before it retraced back to about 4% current return, it had reached to about 11% return from the pivot point in a matter of 3 days. So considering the current market situations, we will continue to hold this position. And if it breaks below this level, we will exit it. Otherwise, we will continue to hold this position. So now let's look at what are some of the additions to our watch list for the next week, starting with Rolex Rings. So in Rolex Rings, if you see the chart pattern, in 2022, it formed this narrow range, about 20% range. And then it finally broke out of that range around June last year, and then rallied about 57% from that point before it sort of got into again a narrow range trading of about 26, 27%. And now it has formed a nice cup pattern over 280 sessions. That's close to a year or less than a year slightly. And last week it broke out of the cup pattern uh, with nearly 6 times the average daily volumes. So just so that you can see this clearly, let's zoom in a bit. Yeah, so as you can see here, the volume spike is quite evident here. So this is a qualified breakout. And after that, we would like to see a pullback or a consolidation around the pivot point as per our trade setup, which is what we are currently seeing with the corresponding volume contraction here. If you compare it with other days' volume, their volumes have been falling as the price is moving slightly lower. And we would like to see this retracement or consolidation happening between the 2200 levels to 2000 levels. If it falls below this, then the consolidation pattern still continues and we'll consider this breakout as a failed breakout. However, if the price moves up again from any point between this range and crosses the pivot point again, that is 2200, I will initiate position in this stock with a stop loss around 2000 levels. Next up is Force Motors. Now in Force Motors, if you see, the price attempted to move above this 1599 levels. It attempted twice and failed, after which it saw a pullback, and it was a sort of major pullback, about 50% pullback nearly. Before it jumped right back, and on 30th May, it broke out of the earlier resistance level, supported by 10 times the daily average volumes. And even the subsequent day was very heavy in terms of the volumes. And then the price moved up about 42% from the earlier resistance level before it again got into a narrow consolidation range. Now, during this price range, you can see a volume contraction here. And when it broke out of the range on Friday, it again saw a substantial volume compared to the previous sessions. So we can say it has broken out of the consolidation range. If we get an entry around 2320 levels, I will create a position here with a stop loss around 2100 levels. Now one might argue that Friday the volumes were not higher than the average daily volume, then why are we considering this as a breakout? So there are two factors to consider here. One is in few of the recent sessions, the volumes have been exceptionally high, which has put the daily average volume also on a higher scale. But if you compare the volumes with the most of the previous sessions, you will see that the volume can be considered substantial. So it has not broken out of that range on weaker volumes. And secondly, Friday was especially a weaker day for broader market. A lot of stocks had fallen. But if you look at the price movement for this stock, it moved nearly 6.5% when the broader market was underperforming on that day. So considering these two factors, I'll still consider this as a breakout and see if we can get an entry around 2320 levels. And the last one on our list for this week is Talbros Auto, another auto component maker. Now, if you look at the chart for this stock, it had attempted to break out beyond the previous highs of 563 once, but that breakout failed, as you can see here. And around early part of this month, it finally managed to break out of the previous resistance level, and the subsequent sessions were supported by heavy volumes, nearly 7 to 8 times the average daily volumes. And it rallied for about 25% before it formed a consolidation base again. And currently, the stock is trading in the consolidation range, about 8% price range. And you can see here after this spike in the volume, the stock has been trading in a narrow range with volume contraction. So once the stock moves out of this consolidation range, supported by higher than the average daily volumes, I will initiate a position and the stop loss will be somewhere below this consolidation range. In this case, we might have to keep our stop loss slightly wider than 8% because the whole consolidation range itself was about 8.5%. Hence, our position size will be smaller than the usual. That's all for now, friends. If you learned something valuable, please give a thumbs up. Please do subscribe to our channel and share it for maximum reach. And have a profitable and risk managed trading. Thank you.